1 minute. I will share my presentation first. Do you see my screen now? Do you see the screen? Okay. Perfect. Then we can start. Let me check whether I have started the recording. Is it being recorded now? Oh yes, it's been recorded. Right. All right. We'll discuss relatively this lesson. Actually, in terms of substance of what we have to learn is a less amount, insignificant amount. But in terms of steps, procedures, and all these things are concerned, it looks to be a little bit lengthy compared to the previous lesson, that is job costing. The process costing also, the process costing is also identified as another costing method. So we talked about cost assignment. Then when we assign costs, different methods were discussed. Among them, we first explained you in detail the last week, that was job costing, where the cost objects are specific jobs. So single jobs. Then we calculated job costing in that way. It's relatively easy. So this one, process costing, in terms of calculation, I always say that nothing to worry. It's simple nowadays, because you need not to worry much about calculations. But first we have to understand why process costing is involved, and the cost of a cost object, cost of a cost object. Finally, in terms of cost objects, when we send them to the market, cost objects must be able to identify it as a particular unit of production. So therefore, ascertainment of the cost of production of a given unit or a given product. Um, why this particular name? Why the name, the process costing has been given there? Because it's a fact that in any production, irrespective of the method in which we determine the cost, there is a process. If you take any kind of product or a good or service, that is a product, both are products, any product, there is a process. Even if you pluck some things from maybe a village or jungle, maybe fruits, and sell without doing anything, right? You climb to a tree or just make some arrangements and uh, um, just pluck some king coconuts and keep it along the road and sell it. Is there any process? Yes, there is a process. So what is meant by a process is anything the collection of action. Even though a small buying and selling or manufacturing, irrespective of its sophistication, there is a process. There is a process. Even in job costing, there is a process, production process. But we did not ascertain the costs of different processes. So that's what we have to first understand. Even if you just look at this picture, it tells you how particular items are that particular vehicles are being manufactured. Technical process, technical process. I hope it's clear to you. In all the production processes, there can be a process. But when we talk about process costing or ascertainment of costs of a process, it implies that that particular production process goes through several processes, at least more than one process, at least more than one process. Otherwise, we need not to deploy process costing method. So is that clear? Number one, there are more than one processes. So in real life production processes, it would be many. Take the example of this automobile manufacturing. So lots of processes can be found until that particular product is put out from the market, or maybe send it to selling agencies. Another example of tire manufacturing. So process is there. Paper manufacturing, any manufacturing, even rice producing, though the process looks to be simple, lots of steps are there. Lots of steps are there. Then why process costing matters? In some business or some production processes, costs accumulated in one particular process is significantly material high compared to others. So therefore, if you do not ascertain the cost of each process, your final cost ascertainment would be inappropriate, I do not say that is inaccurate or not, because there wouldn't be any complete calculation. So to some extent, estimations are there. But if you do not deploy appropriate methods of ascertaining cost, the final cost of a unit would not be appropriate. So therefore, processes are there. Each process consume a material amount of resources, whereby significant amount of costs can be there. And again, these processes should be distinct from each other. For example, operations of in say textile industry, designing stage, right? So designing stage, sometimes it may go up to mental modeling even. Once the model is done, it has to be either entered into computers, or you have to have a layout, you have to communicate it to the next staff for cutting of fabric or raw materials. So designing is therefore can be done even outside your factory. You got it? So designing. So in most of the famous or the highly branded upmarket products, designs are done by, if you take Louis Vuitton and all, um, product designs are, you may have a department inside or the process, but the process might take place somewhere else. It's all right. So, but it can be separately identified. Cost can be separately identified. Then the cutting, then the operation, the processes can be identified, cost can be identified. If you can't do these things, actually, so process costing will not involve. Then we need to think of another method of ascertainment, maybe simple apportionment or any other method can be used. Please just raise any question if you have. What I try to do is to explain you the basic background of each subject rather than taking you through a calculation. So some, in order to familiarize with calculations, you will have some tutorials. You need not to worry. Otherwise, you can practice the questions given in the manual, and you are free to take any stuff from the internet, because if you explore the internet nowadays, lots of calculations are there, materials are there, explanations, and all those things are there. You need not to worry, but you need to be worried about the philosophy behind this. Why do we learn these things? What are the real uh, uh, um, reasons behind how it happens, why it happens, what are the uses of learning these things? So in real life situations, how are we going to put this into practice? So they are the learning, right? So learning is not the things that you do simple calculation, but we use some calculations for the purpose of explaining the subject. I hope the message is very clear to you. So if you have understood it, actually already you have learned process costing. So the rest is simple things. And for the examination purpose, always you know that when we have a particular subject, we limit our learning objectives. It does not mean that these are the only things that you are supposed to learn when you learn process costing or anything. No. So you can go beyond. But for the examination purposes, it is unethical for us to test something that we have not included in our outcomes. So therefore, after learning this lesson, you must be able to do these things. So that's what we call outcomes. So you must be able to do your competencies. You must be able to demonstrate where are you going to do these things in the examination. Only as far as your degree is concerned, only in the examination, only in assignments, not in anywhere else. But in real life, these competencies can be applied. If you learn them in that way, can be applied in your day-to-day life at the working places. That is the place. But here we limit it to examination. What is number one? Explain when process costing system is appropriate. So you have to explain when and under what circumstances it is appropriate. Now, as I told you, now you have the answer. You should have these processes, distinct processes, cost is material, cost could be identified, and likewise all those things. In a real life situation, so when these processes take place, you can give some examples. Production process take place maybe continuously, and again, homogeneous the products can be seen in the production lines. So likewise, think from the practical point of view. So there is one learning outcome. The second one is accounting treatment for normal and abnormal losses and abnormal gains. It's rather technical thing, but in the examination, so more weight comes. And again, you may just struggle how to do this thing, but it's nothing. Very simple concept. We'll discuss explaining normal and abnormal losses and gains. Then prepare, process, normal loss and all these things, accounts. So you are very good at preparing accounts, T accounts, and it's one way of maintaining records. Even without preparing these accounts, you can ascertain the process costs. You can calculate the costs of each process. You can calculate the cost of each and every cost objects and the units. So you have to understand now we are trying to bridge these calculation processes embedded with the accounting information system and the financial accounting. That is number 3, connects to financial accounting aspect. Explain and calculate equivalent units. Simple mathematical explanation. I will equivalent. So therefore, they are not real physical units, but in terms of equivalent. ඒවට සමාන units විදිහට අපි සලකනවා. Therefore, when we think of equivalent units, there is an assumption. Not real units sometimes. Then compute the value of closing stock, because in any production process, there could be completely finished goods and partly finished goods. So how are we going to ascertain value of finished goods and partly finished goods? That is what we call work in progress. When it comes to this calculation, 2 techniques which are really familiar with you, you're familiar with these 2. I again use weighted average cost method and FIFO method, but don't get it confused with what you have. Like actually FIFO and weighted average in principle same, but in the weighted average and FIFO you used in inventory valuation, like basically from financial accounting purposes. Here the same concepts are used to ascertain the value of work in progress, not anything else. We will discuss. The last one, just simple comparison of job costing and process costing. So job costing already we discussed. Now you have some idea. The last learning outcome is a straightforward. Already you have the answer. Right. So what's process costing? Already I explained a little bit. If someone asks, oh, a question comes in your final examination, you can say that it's a method of costing. That's it. The method of costing. But this particular method of costing mainly involves in manufacturing, because in other cases, the processes would be very short and not distinct from each other. So therefore, process costing is not required to be used in other. It does not mean that it's prohibited. You can use process costing whenever you want, but it's more appropriate if that is the continuous or long manufacturing processes are there. And again, the production takes place in large quantities, like large batches. The processes takes place. So therefore, it is easy for us to ascertain the cost of a particular process and one place, one center, divide the entire cost by the total number of units produced. So that is why when you have large number of quantities, process cost matters. Otherwise, if only one unit is produced in a process through many processes, need not to worry. Why? Cost can be directly traced to that particular unit. You need not to worry. Then already I explained this. Distinct processes. Processes are different from each other. Then in process costing, costs accumulate at different places. What are the places? They are the processes. A process can be a department. Process can be a particular task. A process can be a particular responsibility. So likewise. So we define it as a process. In a process, what you have input on one hand. Without having these things, so process would not take place. At the end of the process, after the process completes its job, then automatically outputs are there. So that basic relationship can be used here. So therefore, costs accumulates where? In processes. And costs are assigned uniformly to all units that pass through the processes. So I just told you there are like large number of units are produced at the same time. Therefore, we do not discriminate each end product. So homogeneous products are there. When homogeneous products are there, it is easy for us to uniformly or evenly ascertain the cost. So this is a simple illustration. I think I can quickly pass this chart. Process A, the output of process A would be an input of process B. Meantime, you can see output of process A becomes an input of process B. Meantime, another inputs will come to process B. It's possible. In process A, inputs are there, material, labor, or any other thing. You can think many, but for the simplicity, we categorize them into three: material, labor, and overheads. Different types of, if you want, 1001 items could be there. So then the, say, in say um, garment manufacturing, partly cut products. So the cutting department, once the fabric have been cut according to the design, their job is done. Therefore, the cut materials would be transferred to sewing department. So that become those finished goods of process A becomes raw materials or inputs of process B. Other items also would come to that process. For example, the sewing, in addition to this cut clothes, you need such as materials such as threads or maybe some other materials. We don't have knowledge about all those things, but we can assume that simple cut pieces of clothes are not going to be a fabric like cloth. You need some other accessories. Then likewise, there could be many processes, assuming that the process B is the final one, then the completed production. Completed production is transferred to finished good. So we assume that, so that is the finished good. So in account, so this is the real process for accounting purposes in under integrated system. When it comes to accounts, so the T form of accounts are the accounts that we manually see, but in our computerized accounting systems, we need not to necessarily maintain T accounts. So as long as logics are there, debits, credits, addition and deduction, and the structure is there to have all these facilities in many computer software applications. But it is easy for us to use T accounts to understand the accounting part. Why? We have learned these things in advanced level. So in T accounts, we try to understand. Actually, in accounts, T accounts, what happens is only two mathematical function. This is addition and subtraction. Other than that, nothing happens. So raw material goes to process one. Conversion cost, you have learned this thing. Conversion cost includes anything, labor, other material, overheads, and all those things in order to make that particular production complete. So process one, output of process one goes to process two. Here, for accounting purposes, what do? We transfer the value, final value, financial value. We do not worry about other things. How it takes place, so managerial skills, quality, all those things will have to be looked after by some other people. Then process two to finish good, and once they are sold, cost of goods sold, already you have some knowledge about this thing. Finally, if you want to take the average cost per unit to produce, total cost divided by number of units, it will give you the cost. But here, since processes involved, we do not take the total cost here, divide by the total number. We'll take the total cost of each and every process divided by the number. That is how we ascertain the cost. Now we will look at different situations where process or the costs are ascertained when resources are used in processes. Right? The basic situation is production takes place in processes, but different scenarios are discussed. What are they? Number one is when all products are fully completed. So very simple, or sometimes may not be practical. we assume on the first scenario, whatever the raw materials that you put into a particular process will be converted into complete products during that particular time period. If you take a particular day, you put raw material from this side and other side you get the finished good. In other words, there is no half finished products. Work in progress is not there. You take milk and use it for making ice cream. Then on the same day, you have the complete or finished ice cream. So this situation would be practical for day, or maybe you need to identify the time period. Sometimes in a day, some raw materials cannot be converted into a final product. Therefore, you need to identify the time frame. But first scenario, we will be discussing a situation where there is no work in progress. Then two aspects again, the losses or leakages are discussed. It is a fact and it's very obvious in any production process, there could be wastage. Even in the garment factory. So it's not that the total cut pieces of clothes are going to be really finished good, because somewhere down in some processes, there may be some mistakes or wrong stitching, or maybe additional cut may be there, or maybe due to some other reasons. So there may be wastes. Sometimes some waste would be as a result of purposeful theft. People might take something out from the production process. That's also possible. We do not know. Losses are, leakages. Better word is leakages, but accounting we use the word called loss. Loss means inputs are not going to be converted into outputs. There is a difference. For example, you input 100 units, 100 pieces of clothes, but at the end of the day, you get only 90. Then the loss is 10. Likewise. Therefore, losses are usual to production process. So from the practice, managers or industries have calculated the possible loss. Assume that when you even cut fabric, then there is a normal loss. Okay, that is the normal loss. Even rice production. So when you put paddy into the mill, rice mill, then there is a particular ratio. If you put this much kilogram of paddy, it will give you this much. I don't know the ratio, but there is a ratio. So that's what we call the normal loss. Is that clear? So therefore, if there is a normal loss of 10%, and if you introduce 10 units or say 100 units, normal loss is 10%. Simple mathematics, right? Try to understand from this mindset rather than thinking of accounting. What is the meaning of normal loss? As I just told you, it's a practice. It's obvious. Then industry or the businesses determine, okay, this is the normal loss. In the case of rice, in the case of any other item. So we'll assume that in a particular industry, 100 units are introduced as raw materials. But industry is subject to 10% normal loss. Then if you carry out your production process in a very professional manner, how much units do you expect? You expect 90. That's the reality. But really you might get 92, 95, or maybe 100. Then that could be a very exceptional case. Or maybe 85, 89. So reality may deviate from the expectation, but normally it's 90. It's 90. So therefore, it's very logical and rational for us to absorb the total cost of that particular process to how many units? 90, not 100. That's a logical arrangement. Even though you produce 91, you absorb them into 90. Then your cost calculation would be very practical. Is that clear to you? Your normal loss rate is 10%. You incur 10 million. Or say, just for the simplicity, I'll change the number, 90 million. 90 million. 100 units are put into the process. Then you get 90 out. Then 90 million total cost. Just imagine a big electronic equipment, and 90 million is the total cost. You introduced 100 units, then your expectation is to get 90 units under the normal loss concept. So therefore, what would be the logical and rational cost of a product? 90 million divided by your expected product, that is 90. 90 million divided by 90 means 1 million. So therefore, cost of a product is 1 million. You got it? Then deviation may come. Assume that due to some specific reasons, so your staff is very good, skillful, you look after all those things. As a result, you were able to produce or manufacture 91. Why that additional 1 unit came out? It is not because of the normal practices, but because of your special attention, special care. So due to something special, therefore it is not normal. If something is exceptional, in accounting language, we use the word abnormal, but when we use the word abnormal, it looks to be a little bit distorted, right? Abnormal. I don't know about the appropriateness of this word, but that is being used. So therefore we got to use it. No worries. But don't take the meaning of abnormal from that particular sense. It's not something abnormal. It is exceptional in a way. It's exceptional. It's not abnormal. It's exceptional. But this exception happens due to some special reasons. Special reasons. So therefore, if you are supposed to manufacture 90, your production process gives you 91, then exceptional gain in accounting we call, then hereinafter I use the word abnormal with the understanding, not with the meaning of abnormal or distortion. This abnormal gain is there. Then you have to separately identify any value ascertained to this thing. You better account for this thing separately. That is a separate income for you. So for your decision making purposes, logically we can say that, okay, leave it. So just take the cost out of cost of that particular unit out of the process, and you go ahead with the normal situation. Then you would be really in a comfortable situation. Because under normal circumstances, your cost, your expectation is 90. So therefore divide the total cost of 90 million by 90, therefore 1 million would be the best indicator for you to take decision, managerial decision making. But you take that value, what later we will discuss, what are we going to do with this abnormal gain or losses. That is the abnormal gain situation. Then abnormal loss situation. How? The same way, opposite. Instead of 90, you ended up with 89. Then your weaknesses, your problems. It's not the normal situation. What are your problem? Your manager's problem, maybe your employee's problem, or somebody must have stolen it. We do not know. Something wrong with your administration. So therefore, you have to take it out, separate if there is an abnormal loss. Still, for your decision-making purposes, you say that your cost of production of 1 unit is 1 million, but that loss, abnormal loss would be transferred. Even if you go ahead with that assumption, what would happen? 90 million divided by 90, then you still you say that your cost of production is 1 million. You take decision, it's all right. But for accounting purposes, at the end of the day, how many units, the maximum number of units can you sell? You can sell only 89, not 90, 89. So therefore, you say that your cost is 1 million, 1 million. I'm just giving you logical example, not calculation. 1 million. You have 89, therefore your cost of production is 89. Assume that you sold them at any 1.5 million, that is sales. Whenever you compare or your revenue with cost of production, what we call finally cost of sales, to the income statement, you take only 89 million as the cost of sales because you have taken the normal value. Then what are you going to do with that excess 1 million? So that is abnormal loss. That has to be separately recognized. So now you understand how do we deal when there are something called abnormal. Okay. Sometimes these losses, either abnormal or normal, the if this happens, this comes out from your production process, and if you can see maybe as a damage project the product, so there is a possibility that these things can be sold in the market, what we call at a price, scrap price. Sometimes in the garment factories, if the production is not according to the design or a small defect is there, what do? So they consider these things as abnormal losses and sell them in the open market or somewhere at a highly discounted price. How are we going to do with this value? So later we will be discussing. I just gave you a brief explanation about this situation. That this is what we are going to learn. Second situation is when a work in progress exists. The present situation we deal without work in progress for the easiness. Second one, same process is done with work in progress. We'll see. In the work in progress also, we can like make it complicated. Difficulty level can be increased by assuming that there is only opening work in progress, and in a situation where opening and closing work in progresses are there. Third one, when partially completed output and losses exist in the production process. When partially completed output and losses and gains exist. It's the same thing. First one is no work in progress, but losses are there. Here, work in progress. The third one, work in progress and losses are also there. So we complicate the situation. Why? Because in real life production processes, the complications would be much more than this. It is not that easy. So identification of processes, identification of costs and actions, activities are going to be really, really difficult as we learn. And the activity-based costing. In the cost assignment, you learn activity-based costing. But if you have any question, please. Now, we'll take two situations. First, process costing, no work in progress. We'll take a situation with no losses and normal loss and abnormal losses. First, without no losses, then straightforward calculation. Read this question. I'll quickly read it and give you a few minutes to work it out. A company, manufacturing business, so sometimes you need not to worry about that much. So it tells you that the following information relevant to a particular product. What are the information? In input of raw material, that's 5,000 kilogram. It's a particular production which goes through processes. Initially, 5,000 kilogram of raw material is introduced, maybe flour. Cost of 1 kilogram of raw material is 30 rupees. Then you can calculate the cost of material. Direct labor cost, right, 100. Manufacturing overhead absorbed, 150. then output of the process is 2000. So you introduced 5000 kilograms, and output is 2000 units. Are there any losses? Sometimes it looks to be, oh, we introduced 5000, you end up with 2000 units. Oh, there is a loss of 3000 kilogram. No, 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 it's not. Unless the question tells you that there are losses, so we can't assume that there are losses. So what does it mean? When you introduce 5,000 kilograms and end up with 2000 units, actually 1 unit of production consumes 2.5 kilogram of this raw material. That is the understanding. In other words, in order to manufacture 1 unit of this particular product, 2.5 kilogram of raw materials are required. I hope it's clear. Therefore, you are asked to prepare the process account and calculate the cost per unit of the product. So I will ask you to do the first, the B first. We can prepare the process account later. First, assuming that you do not know anything about accounting, as a layman, ordinary person, but at your age, your education, you understand the reading, numbers. This kind of information has been given, and I ask you to calculate the cost of 1 unit in a minute. Just give me the answer. Okay. Very good. Very good. So you just did it. Like, how did you do it? You need not to do any complicated calculation. Yes, very good. Very good. So everyone, yeah, so you're posting values. So just think from that perspective, it is easy. Simple calculation, just add 100,000, 150,000. It is a question for grade 5. 100,000, 150,000, 250,000, 5,000 into 30, 150,000, all together 400,000 divided by 2,000. Yes, how easy it is, right? So is it worthy enough for an undergraduate to learn? It's not. So now you have to understand that if you are learning how to calculate the unit cost, it's your failure. You have to understand the rationale behind this thing, right? Rationale behind this thing. We need not to struggle for this calculation. So this is the mathematics behind. Yes, even at the examination, I advise you to do or follow this approach. Even for financial accounting, just calculate it. Later on, put that into their format. That's it. First, comprehension, understanding gives you lots of things. Even if something goes wrong, you can quickly detect it. If you follow this mental modeling, logical modeling, reasoning, better not to accept or do things as simple followers. Don't do it. So in the account, this is this. So why do you have to worry like this? So if you can simply understand the value of this particular product or cost like this, why do you have to so much? Just 1 minute. Another chapter. Okay, so one question has been asked. What does it mean by no losses? Okay, I'll come to that point. I'll take your question after explaining this. Okay, good. So I don't know. You can argue. You can come out with your own explanation or maybe the different argument. What I feel is, so this way of understanding is easier. Even you are asked to prepare an account, follow this process first. Just do this mentally or logical. At least if you do not know that, do not do the calculation like this, mentally argue. Then you can put the numbers in this particular account, same thing. So same thing has been just put into this particular account: raw material, direct labor, that, and these overheads, that word is missing there, right? Yeah. So last 150,000 overheads, and that total value is divided by, therefore, because in the past, when we follow manual accounting in T accounts, we used to have these memorandum columns. Nowadays, actually, we don't have like this um, memorandum columns in this unit account, because in computerized environment, the values are ascertained, units are somewhere else. Automatically, unit cost is calculated in management accounting, and we do not prepare like this unless we maintain manual accounts. Even manual accounts also, you better maintain a separate record for the quantities. But if you put these numbers in the same account, that is easy for us to understand in the classroom learning. So when you go to real working places, you may not see accounts like this. Then you may wonder, oh, what did we learn in the university? Are they wrong? No, it's not wrong, because you take that concept in a way to teach you an easy way. I hope it is easy. Okay, now I'll answer to this particular question. Question is this: for your benefit, what is it? What does that mean by no losses within the process? Okay, no losses in the sense, so we'll take the same example. 5,000 kilogram introduced. Assume that now the question tells you additional information like, okay, in order to produce 1 unit, you need 2.5 kilogram of material, right? Then you are told that 5,000 kilogram were used. Per 1 unit, 2.5. Therefore, you can divide 5,000 by 2.5, you would end up with 2,000. Then you go to the factory and see how many products, because you calculate expected, if there is no loss, expected number of units, 5,000 divided by 2.5, 2,000. You go to the factory, see in the warehouse, oh yes, 2,000 units are there. That means there is no loss. Assume that this unit requires 2 kilogram. Only 1 unit requires 2 kilogram of this particular raw material. What does it mean? In your production process, you brought 5,000 kilogram, divide by 2, then therefore your expectation is 2,500. 2,500. But you go to the factory and see only 2,000. Then you want, so that is a loss. That is a loss. But if that loss is normal, or if it is expected, it becomes normal loss. As in the case of, say, paddy and rice, when we introduce 100 kilogram of paddy into the rice mill, assume that on the other side, you keep a gunny bag or maybe a sack and take the rice out. You get 60. I can't, that's a particular ratio. For the time being, assume that 100 to 60. So you introduce 100, you get 60. So that is the practice. So on one hand, before starting the production process, you had 100 kilograms. Now you have only 60 kilograms. So 40 has gone vanish in terms of husks, in terms of any other thing. So like that's not seen. Sometimes byproducts maybe they are rice husks. You have seen this, no? We hal bawata pat karanකොට ඉතුරු වෙන වී පොතු 10ක්. That also can be sold. But හාලුයි වී අතර වෙනස ගත්තාම අර වගේ රේෂියෝ එකක් තියෙනවා. එතකොට අපි manufacture මේ වගේ production mill එකට 100 kilogram, 100 million, 100,000 kilograms දාපුවාම එළියට එන්න ඕනේ 60. එළියට එන්නේ 60. Then normal loss is 40. We have to accept it. ඒ නිසා අපි total cost එක බෙදන්නට ඕනේ ඒ 100 kilograms වලට ගිය cost එකයි labor, machine, overheads ඔක්කොම ටික. So මේක අපිට තේරුම් ගන්න පුළුවන් උදාහරණයක් නේ. මහ ලොකුවට යනකොට නම් මේ අපිට සාමාන්‍යයෙන් අහලා නැතත් දැකලා නැතත් කිව්වහම තේරුම් ගන්න පුළුවන් නේ. we හාල් බවට පරිවර්තනය කරලා බොහොම normal process එකක් තියෙන්නේ නේ. Then we can understand it. එතකොට අර ගිය ඔක්කොම cost ටික බෙදලා cost එක බෙදලා තමයි අර කීයද බෙදන්නේ 60 වලින්. හාල් කිලෝග්‍රෑම් එකක මිල කියන්නේ එහෙමයි. ඒ අනුව තමයි සමහර දේශපාලන වේදිකාවල මේ මිනිස්සු කෑ ගහන්නේ බනින්නේ. සාමාන්‍ය තියෙන අපි දන්නවනේ පාලන මිලක් යටතේ වී ගන්නවා. විශේෂයෙන් ඒ වී හස්වැන්න නෙලන කාලෙට ජාවාරම් කාර්යෝ ටික එකතු වෙලා කොහොම හරි අඩු මිලට ගන්න මොකක් හරි අපි ගත්තා කියමුකෝ 40ට 50ට. ඒ අර රේෂියෝ එකට දාලා අනිත් කොස්ට්ස් ඔක්කොම ඇඩ් කරපුවාම සාමාන්‍යයෙන් අර එළියට එන හාල් කිලෝ ප්‍රමාණයෙන් බෙදපුවාම හාල් කිලෝ එකක් රුපියල් 50ට 60ට ඔය වගේ යන ගානට අනුව දෙන්න පුළුවන් විදිහට තියෙනවා. ඉතින් මිනිස්සු ගොඩක් කෑ බනින්නේ රුපියල් 60ට කොස්ට් එක වෙන කාලෙත් වෙළඳ පොලේ විකුණන්නේ 100ට. ඒකට 40 කවුරු හරි එක්කෙනෙක් දෙන්නෙක් ගන්නවනේ. ඒක දැන් බලන්න ප්‍රොඩක්ෂන් ප්‍රොසෙස් එකක් ගත්තාමත් හරි ඇබ්නෝමල් වෙනව නේද? ප්‍රශ්නයක් එනවනේ. අර මම පළවෙනි පාඩමේදීත් ඕගලන්ට කිව්වා මේ මොකක්ද මේ මැනේජ්මන්ට් accounting ඇතුලේ ප්‍රොඩක්ෂන් සිද්ධ වෙනකොට මේ වැලියු එක ක්‍රියේට් කර වෙනවා. ඒකේ සමහර ඔපචුනිටිස් එනවා කීප දෙනෙකුට වැඩි ප්‍රමාණයක් එළියට ගන්න. ඒක අසාධාරණ තත්ත්වයක්. දැන් 60ක් නම් කොස්ට් එක වෙන්නේ. මේ process එක දිහා බලපුවාම you may understand the situation, or the farmers and others, they put lots of effort into the production process, and finally they convert paddy into rice 1 kilogram at a cost of 60 rupees. But when a consumer goes to the market and the consumer buys it at 100 rupees, so 40 has become a profit or big junk for selected people. ඒක ගොඩක් දෙනෙක් අතර නෙමෙයි යන්නේ. එක්කෙනෙක් දෙන්නෙක් අතරට තමයි යන්නේ. දැන් පැහැදිලි නේද? So that is what we call normal loss. Assume that, so this is the standard in the industry, 100 to 60. But in a particular rice mill, you also wanted to start a business. You put up a factory and fix some plants and hired employees and bought paddy and started producing rice. My goodness. When you do the same thing, so because you didn't have knowledge, so you appointed some managers and you bought 100,000 kilogram of paddy, expecting that 60,000 would come out. You go to the rice mill and look at the end of the day, you see only 50,000. 10,000 is missing. So that is not normal. Therefore, that difference is called abnormal. Sometimes maybe 40. So for the simplicity, 50. So there's a difference. That is abnormal loss. Why that abnormal loss come? Maybe due to real reasons. So stupid employees sometimes, we do not know. Maybe old machines. You may not have used appropriate technology. So therefore lots of rice or the paddy were broken into small parts. So your machine was not good. You did not apply proper methodology, right? Because it's your fault. It's not the fault of industry. Industry has proper machines. Industry has proper knowledge. Industry has proper employees. But you did it in your own way. It's your way. You're wrong. Your fault. Therefore, therefore you can't say that, hey, I introduced 100,000, so only 50,000. Therefore, the price went the price goes up. Please, consumers, come and just help me buy it. So you can't say that. You have to still assume that you produce 60,000. Therefore, your total cost has to be divided by 60,000 and determine the price. Either you like it or not, this is the price at which you have to sell in the market. You got it? So that's why we use the normal process and not the abnormal. So abnormal, that the loss of that 10,000 has to be recognized as your own loss. But this particular loss, abnormal loss, can happen due to theft, stealing. Maybe your manager is very shrewd and smart. He pretends that your machines are not working properly. He manufactures actually 60,000, take 10,000 out quickly, maybe in the middle of the night. The following day, you say, okay, 50,000. So it is internal, the management control issue. But if you can detect someone has stolen the things, you have to collect it. You can't transfer this to the cost and recover from the consumer. I hope that you got the logic. By the same way, like so it's more likely if you are efficient, your technology is good, your production processes are good, you are doing your business in a smart manner, your actual production should be almost equivalent to expected. Therefore, it embraces only a normal loss. That's it. But due to your own fault, there may be abnormal loss. Therefore, in practical situation, what is most likely to happen are either normal loss or abnormal loss. But technically, for examination purposes in textbooks, we argue that there could be a situation of abnormal gain. How? We'll try to understand this question with the same example. 100,000 paddy, it is well established now, 6,000 should come out. But in your production plan, my goodness, 70,000. How come? Right? So there's yes, yes. One is yeah, so one question is asked: is this similar to resource waste? Yeah, it could be. It could be one of the reasons. As I just for resource wastage, theft, mismanagement, many things. Wrong technology, as I just told you in the machine. If you have just taken a machine that really crush your paddy into small pieces and not properly polished, maybe in the polishing process, your machine doesn't work properly. You have not deployed the appropriate technology. Yes, it's possible. Now, abnormal gain situation is it's highly technical. It can happen under very remote or very unlikely situation, but it can happen. Huh? As I just told you, now industry accepted pattern is 100,000 paddy, 60,000 price. But you put up a factory, you wonder, my goodness, you introduce 100,000, your mill gives you 70,000. How come? One possible scenario, God must have given you 10,000 more. So in Sri Lanka, these kind of things are happening, right? Oh, Kali man, you must have given you. It's possible, right? Who knows? Excess. You may have 101 reasons. What are the practical reasons for this additional 10,000? If there is no unusual things for practical, the probable reason, instead of 100,000, maybe due to again your managerial issues and all those things, you may have input more than 100,000. That's why you have 70,000. Then again your problem. But we assume that there is no problem. Still you have 100,000, 70,000. So for the time being, assume that no, God didn't give you, any other person didn't give you. There is no mistake that exactly you have input only 100,000 kilograms. Under what circumstances can you produce 70,000 rice kilogram? Highly hypothetical, imaginary, but you can argue it can happen due to advanced technology or maybe new technology or superior efficiency that you have used. And because of these reasons, so you were able to uh, produce 70,000. But that 10,000 is too much. But maybe instead of 60,000, 61,000, 60,500 would be possible. That's efficiency. Even if you have superior technology and efficiency, it is unlikely that you would end up with 70,000. If you end up with 70,000 with your technology, what does it mean? Others also can do the same thing. It is going to be an exceptional, abnormal gain only for a temporary time period. Others also will get to know if this is a real situation. They use the same technology. They replace the machines. They hire people. Knowledge um, automatically goes there. So therefore, they also manufacture at that level 70. Then what happens in future occasions? Normal loss becomes not 40, 30. The ratio changes from 100 to 60 to 100 to 70. Now you understand. So in a real or the practical situation, if your real production is say 61,000, okay, that 1,000 is due to your special knowledge, skills, competencies. Therefore, you should be rewarded. You should be rewarded. So you take that as a separate gain into your accounts for managerial decision. You are not going to um, divide the total cost by 70,000, sorry, 61,000 and sell at a lower price. So even you can sell at a low, so basically you sell at the price, the market price, But for accounting purposes, your cost of production, you compare several. So because actually now you have 61,000 or 65,000 kilograms of rice. The selling side, revenue side, 65,000 into 100 rupees, this much, 6.5 million. Then that revenue is matched with your cost of production. What is your actual cost of production? Cost of production is unit cost multiplied by 65, sorry, not by 60,000. Actually, normal situation is 60, but you multiply, you inflate your cost of production. Did you get the point? That is the logic behind 65,000 revenue, 65,000 cost of sales. Actually, cost is 60,000 or 60. So you inflate it there to match it under normal circumstances. Under normal circumstances. So the inflated cost of sales is recognized as your abnormal gain. That is the logic. If you understood it, perfect. You have learned. Need not to worry about these accounts, the accounts. All right. So questions, what is the correct approach for losses? Doesn't it mean we are consuming more of raw materials than standard, or we are under producing than expected? Yes. So if more losses are abnormal losses are due to your own problem, the correct approach is to deploy the appropriate technology, deploy skilled labor and processes, and improve your quality inspection and all these things, and run the production process to match with the normal losses. If there are abnormal losses, then you have to separately recognize you can't run the business for long. The correct approach is to meet industry or go ahead with the industry at least benchmark or outperform the benchmark. That is the correct approach. Okay. So these are the explanation about normal loss and abnormal loss. Some facts are given, but you can think of any other reasons behind these facts. Some reason, weight loss, maybe evaporation, shrinkage, and rusting, so many things, weight losses. In the case of paddy rice, so none of these things. So that is the normal, like most of the things go out as byproducts, broken rice and rice husks. And abnormal losses are due to poor working condition, yes. So we discuss carelessness, rough handling, low quality of raw material, machine breakdowns and incidents. You can add on what the technology, even stealing, poor management control systems, anything that are not usual or can incur cost can be added on. ඒක ඕන තරම් එතන වෙන්න පුළුවන්. ඒ කියන්නේ ඒකෙන් පේනවා ඒ කාරණා ටික කියවපුවාම පේනවා මේක අපේ ප්‍රශ්නයක් මිසක්ක ඉන්ඩස්ට්‍රි එකේ ප්‍රශ්නයක් නෙවෙයි කියලා. පැහැදිලිද? Alright. එහෙනම් ඒක ඔයාගේ එක්ස්පෙන්ස් එකක් විදිහට ට්‍රීට් කරනවා. Here we do not separately identify it. So let it be there because it's the practice. Now we will take up this question. I just wonder whether we would be able to complete the entire session today. Anyway, no worries. So there is no point of just hurrying. In case if we will not be able to complete all, we'll take it up the next week as well. Colombo PLC manufacturing business which produce several products through continuous processes. So processes are there. For the simplicity, it says no scrap value. What does it mean? There are losses, but the losses do not have any scrap value. In the case, take the same example. Paddy rice, 100 kilogram, 60. 40,000 is lost. So most probably, the rice husk, or broken rice. Assume that even though these things are identified by yourself, you are not going to sell them in the market. Broken rice ටිකක් දෙනවා ඒක ඔයා කියනවා employees ලට අරන් යන්න කියනවා වැඩ කරන අයට. එයා විකුණන්නේ නැහැ. So that it means that it does not have any Scrap value, you are not going to sell it. Even the higher, assume practically what happens is these things are sold for um, other products. Maybe broken rice can be sold even as a rice at a low price, or can be sold as an ingredient for maybe animal food, or even rice husks, or rice what sometimes we call brands, can be used um, to produce something else. Therefore, those things have value. But if we assume that there is no value, that means there would not be any excess income coming from that. Therefore, calculation would be easy. First calculation would be done in that way. Okay, take the example. Input raw material 2000, cost of a material is 50 rupees. Now you mentally calculate what is the material cost. 2000 into 50. Straightforward, right? Um, Conversion cost. Here now we have reduced. Instead of saying labor and overheads, everything together 75,000. Normal loss is 10% of input, and output, real output 1,720 units. So quickly do the calculation and let me know. So what is the normal loss in units? So because there is no value for normal loss, even for abnormal loss, there is no value. Why? Scrap value is zero. Calculate the loss in units if there is any abnormal loss in units, and cost of a unit, and the value, cost of abnormal loss, amount of abnormal loss. So later I'll show you these values in the ledger account. Your task is to do it quickly, meant by mentally, or maybe you can use Excel, or take a pen or piece of paper and do it manually. Don't prepare accounts. Try, what are you supposed to do? Number of units to be identified as normal loss, number of units to be identified as abnormal loss, and the value of or the total cost, and the cost of one unit, and total the amount of the abnormal loss. Four things. Quickly, I'll give you 5 minutes.